Oh my God, I seen this before, but I do not see this often. This is the future projections of, hey, what's up dreamers? I'm Zeke and welcome to the Dream Green Show. Now I'm not gonna waste your time. I'm gonna get straight to the chase. Listen, there's something very special happening inside the market. This opportunity does not always appear on, especially on good quality stocks like this that usually goes up. Now what I'm talking about, you could probably already tell from the title of this video, you guys have been loving this series, which is stock splits. Now the reason that I keep bringing you these stock split videos is because it's one of our big three measures, right? Now the first measure is we always buy companies that have stock buybacks. If you see a company out there like Microsoft and Apple having big major stock buybacks, we go in because the less shares there is out there, the more valuable our shares become in the future. The second one is that we love overreaction to bad news inside the market. That's when we go in, we buy up a good quality stock, like when Meta changed their name from Facebook to Meta. This is bad news in the market. Still a great company. We could have got them at an amazing price. We always look for overreactions. And the third one we look for is stock splits. Now, what is a stock split? Today I'm bringing you 4 stocks that's having a 2-to-1 stock split. That means if you have $1, I will now be giving you 2 50-cent coins, right? It's the same exact value. You're still gonna have $1 at the end, but it's gonna cut the price of whatever the stock is. Let's say stock 1 is $100, right? And then you have a 2-to-1 stock split. Now, if you own 1 share, you're gonna have 2 shares worth $50 each, which still adds up to $100. So nothing fundamentally changes about the stock at all, but it becomes more attractive to retail investors like us to go in and buy more shares, and then we could start buying calls, selling calls, cash secure puts, and do more options with it at a more affordable price to retail investors. And with that happening, companies that usually have successful and good stock splits, like a 2-to-1, 3-to-1, 4-to-1 stock split, not the opposite, 1-to-2, 1-to-4, 1-to-10, that's bad, but a 2-to-1 stock split, then those companies usually outperform the S&P 500 by around 6 to 8% throughout the next calendar year. But before we dive into it, consider joining the Patreon. The Patreon take you to my Discord. I'll talk about stuff like this all the time. And then you'll also be a part of the best community of investors and traders that want to be financially free, just like you. I know you want to be financially free. And we also have 3 pro day traders in there that post their day trades every single day, and they absolutely be killing it. If you guys want to be a part of that community, check out my portfolio, check out my trades, my option trades. I sell cover calls, I sell cash secure puts. If you want to check that out, consider joining the Patreon. That link is going to be down in the description and down in the pinned comment section. Now, the first stock I'm going to bring you guys that's having a stock split on January 16th is ticker symbol RLI. Now, here we are on Moomoo, ticker symbol RLI. And as you guys can see, they had a pretty explosive growth over the last year, all the way from $120 up to $177. Now, RLI is a specialty insurance company that's offering niche properties and casualty insurance products, right? It operates in 3 main segments: casualties, properties, and sureties, serving both individuals and corporations and businesses and stuff like that. Now, why is this such a good investment? It pretty much has a strong history of steady growth, profitability, and it has a regular dividend payment that I'm going to show you guys. So if we come right here right quick, if we click right here and come over to Seeking Alpha, you guys can see, yes, they're up 20% over the last year. And then we're going to hit dividends and scroll up. You guys can see that they have a 3.1% dividend yield. They've been increasing their dividends every single year for the last 12 years. And they have a growth rate over the last 5 years of 4.61%, and they pay out quarterly. So a 3% dividend yield on a stock that having a 2-to-1 stock split is pretty amazing to me. Now, if we come back over to Moomoo and then hit company right here and scroll down, let's look at the analyst ratings. Right here is showing that it has a target price of 182. So let's click this right here. And oh my God, I seen this before, but I do not see this often. This is the future projections of RLI. Right now, currently, throughout the next 12 months, it's giving it a high of $190, a median price of $182.40. And then the low price, they're giving it the low price over the next 12 months, $175, which is insane. And they take all of these ratings down here from Jeffries, RBC Capital, KBW, Oppenheimer, Compass Points. They're taking all of those target points, averaging them out, and then they get in the high, the medium price, and then the medium price, and then the low price. So analyst is giving this a good rating. Once again, if we come back over to TradingView, you guys can see that for the last couple of years, they have only been doing one thing since 2020. They've only been going up, and we're going to be getting them at a steal, because, you know, if you invest inside 10 companies that's having a stock split, that has a successful stock split, I'm pretty sure 8 to 6 of those companies are going to be bangers on your list and going to take it out the water just based off of statistics. So if you're grabbing some of these companies that have good 2-to-1, 3-to-1, 4-to-1 stock splits, you will make some money inside of the stock market by being just seeing the same patterns over and over and over again. So this one has been performing pretty well since 2020, climbing all the way back up to an all-time high of $182. Right now at the recording of this video, is sitting at around $163. And as you guys can see, usually when it pulls back to this yellow line, the 200 EMA, it bounces off this yellow line as a support. So hopefully it could pull back a little bit more, and then after the 2-to-1 stock split, we could go in and grab this up at around $80 per share. If you do want to know when I'm going to go buy up some of these companies, you'll get the alert if you're inside the Patreon. Now, the second company that we're going to be looking at is Oil Dry Corporation of America, ticker symbol ODC. Now, let's pull this up right here on Moomoo. If you guys do want to use Moomoo right now, just from signing up with Moomoo, using that platform, deposit $100, you could get up to 15 free shares of some of your favorite stocks. I'm gonna leave that link down in the description. You can sign up, deposit your money, use all of their tools like I'm using in here, the analyst tools, they have stock screener tools, and you can earn 8.1 cash sweep interest on the uninvested cash that you have sitting inside your portfolio. So if you want to check that out, you could go ahead and check that out as well. Now, if we're taking a look at ODC, we could look at the charts. As you guys can see, they've been doing fairly well too, all the way from 2023 with a low of $47 and then a high of $93 over the last year or so. And if we was to click on company, oh yeah, I forgot to tell you guys what ODC do. ODC is a producer of absorbent products and minerals. They pretty much mine for minerals and different materials that help absorb oils and any kind of liquid that is out there. If we come over to their website right here, you guys can see that they are the leader. If we click on their products, they're one of the leaders in cat absorbent products. You click on Cat's Pride, the minerals and the stuff that they use inside of all of their products is made to absorb water, and so they mine for these materials. And the ultra pet, everything that's everything that goes inside litter boxes, they're pretty much mining those materials, right? So there's some companies that have been doing fairly well over the last couple of years, as you guys seen. And if we was to go to the Morningstar research, they're giving it a fair value of $90, and right now it's at $85. So if you do want to come over and pull it up on the charts, ODC, it's not my favorite. I do like the first one that I brought you guys. ODC is having that stock split on January 6th, I believe. Yeah, they're having that stock split on January 6th. If we type in ODC, here we go. You guys can see that over the last couple of years or so, it's kind of been trading sideways within this zone down here, and then also within this zone down here. So it's been trading sideways for quite some time now. I can move this down a little bit. It's been trading sideways within this zone for quite some time now, all the way back in 2018. It's just been in between the price points of $22. It's been a price point between $22 and $39, almost $40-ish or so. But recently it just had a big pop. Might need to go in and do a lot more research on this one, but recently it just finally broke out of the zone, had a big pop, had a pullback, and continue to go on a bull run. This looks like a very, very strong bull run for ODC, especially with a good support on the 200 EMA. So this might be one I need to go in and do a little bit more research. Just because it's having a stock split, statistically speaking, it should outperform the S&P 500, but you also don't want to overpay for a stock. So after this stock split, it should pull back to around $42.50. Now, the third one that I'm going to bring you guys is going to be ticker symbol MTH. It's Meritage Home Corporation. Now, Meritage Homes is a leading home builder focusing on constructions and energy efficient single homes, primarily inside the United States. around the Sun Belt region of America. Now, houses are in high demand with ongoing housing shortages in many regions. Metro stands to be one of the companies that benefit from the increased demand for new homes, and they are having a stock split. Now, their stock split is coming up on January 3rd. So if we come back over here to Moo and we're going to type in MTA, there you guys go. Let's look at the chart. Okay, as you guys can see that from January, a little bit before January, so around 2023, it had a low point in December-ish 2023. So around October, November, December-ish 2023 was around $107. And then it had 100% gain, a 100% gain all the way up to around $213 in just about a year and a half, which is completely insane, guys. Now, MTH is also a dividend paying company. They have a 1.66% dividend yield, and there is a quarterly paying dividend stock. If we click on company and scroll down to the analyst ratings and click right here, once again, they have a high of $235 because they're pricing in that the market is going to need a lot more homes. They have a median price of $203, and then they have a low price of $153. So once again, even on the low price, they're saying that on the worst case scenario over the next 12 months, it should still be higher than the current price is right now. So that's stock number 3, ticker symbol MTH. Let's move over to stock number 4. Now, the fourth one is ticker symbol CVLG, Covenant Logistic Group. Now, they had their stock split on January 2nd, so they just recently had their stock split. By the time that this video come out, is a trucking and logistics company that's provide transportation for freight services across North America. Their offerings include truckload shipping, managed freight, and also supply chain solutions. Now, we all know due to Amazon e-commerce growth that they're going to need a lot. They're going to be a lot of demand for efficient logistics and transportation services, and all of that remains high. And CVLG has been one of the companies that took it up and it's leading the path for the logistics for trucking. Now, if we come over here and take a quick look at their charts over on TradingView, once again, this is also a company that only goes up, and right now you could catch them for $26.89 because they just had their 2-to-1 stock split, and they've been trending up all the way from 2020 as well. You guys can see, you could draw a smooth line all the way from here to there to where they have a couple of touch points. It kind of broke belief a little bit, but then continue to trend up, and CLVG looks like it's going to continue to take off as long as people continue to shop online, buy Amazon packages, and e-commerce growth continue to grow. If we come over to Moo and type in CVLG, you guys can see right there is at $26.89 after the stock split. If we was to come over here and look at the target price, they're giving it a high of $34.50, a medium of $34.50, and a low of $34.50. And Morningstar is giving it a fair value of $65, but I believe that was before the stock split. It was at around $50, so everything needs to update. So it's giving around a $10 to $15 gain of where it is today. So around a $7 increase from, so around a $7 to $8 increase from $26. So around 30-ish, 35-ish, 34-ish dollars, right? So CVLG is a logistics trucking company that should perform fairly well in 2025 during this economy. So that's it, dreamers. That is the top 4 companies that is having stock splits in January. That's the top 4 that I could find, and all 4 of them is having a 2-to-1 stock split. What does that mean? Nothing happens at all, except for every share that you have, you're now going to have 2 shares, but the price is going to be cut in half, so your value is still the same. Typically speaking, when companies have successful stock splits, they outperform the S&P 500. So if the S&P 500 go up 3%, this company should go up 8%. If the S&P 500 fall 5%, this company might go up 1% or just break even, and you're still beating the market because statistically speaking, stock splits perform well over the next 365 days after their stock split. Let me know which one is your favorite down in the comment section. Is it the cat litter one? Yes, it's right. The cat litter, the mining company, the housing one, the home building one, CVLG, the trucking company, or is it the insurance company ticker symbol RLI? I think I kind of like the insurance company one right now, even though they're getting a lot of heat in the market right now. I kind of like the insurance company one because they've been performing fairly well, and I also like the trucking company one. Let me know which one is your favorite down in the comment section. If you made it to the end of this video, guys, I would really love to get this video to maybe 800 thumbs up. Last time we got it to around 1,000 thumbs up on the stock split video. So if we could get this one just to 800, that showed me that you guys do really like these videos, and I will continue to make them. If you do want to join the Patreon, I'm gonna leave a link to Patreon down in the description, down in the pinned comment section. That'll take you to my Discord, guys. Come over there, start making money, start to learn how to make money over inside the Patreon. But other than that, guys, I'm Zeke, bringing you the Dream Green Show, and I'm out. Peace.